Hello and welcome to Money Talks with me, George Pitcher, and Ed Shing of the Idle Investor Fund and the Idle Investor book of the same title. Ed, welcome again. Now you're writing for us this week at ibtimes.co.uk about the possibility of a Greek exit from the euro, a Grexit as we're forced to call it. How serious is that prospect for European stocks?
Well, I think it would be very serious if it were going to happen now. But my sneaking suspicion, George, is that as usual, 1 minute to midnight, we get a compromise deal. And that looks the way that Tsipras, the Greek Prime Minister, is going. So it looks like he's going to meet with the European Central Bank, European Commission, IMF. There will be an agreement with the creditors, and therefore we will avoid Grexit, at least for now. We will kick the can a bit further down the road.
Presumably investing in European stocks, though, is very dodgy at the moment because of the nature of uncertainty as to whether the European project is doomed.
Well, I think that's something we like to talk about in the UK, and you've of course got a lot of Eurosceptics in the UK. I think if you were to go to continental Europe, you would hear something very different, which is that there is no going back on the euro. The euro project is by no means doomed.
Right.
It will continue because you have the political might of countries such as France and Germany well behind it. It's closer European integration. That's not going to change tomorrow.
Are you saying that UK investors shouldn't be too alarmed by the Greek situation and should continue to think about investing in European stocks then?
Exactly what I would say, George. I mean, let's start at the beginning. Greece represents 1.3% of the economic output of the whole of the European Union. It's
not that
tiny.
significant then.
Not that significant. I mean, seriously, it's nothing like the size of Italy or Germany, or, of course, the UK. I mean, it's a minnow in comparison. So really, we are perhaps focusing too much on Greece, not enough on the bigger picture. The bigger picture, George, is that we are seeing growth come back in Europe. Economic output is rising, unemployment is coming down, and countries which were informally in great difficulty like Spain are doing particularly well. And that's why I think you should be buying European stocks today. You should close your eyes about Greece and buy Europe.
Okay, well, you've been a great contraindicator from time to time, Ed, for our investors and made a great deal of money for them as a consequence. So in this instance, are you saying to UK investors, be careful, but buy Europe?
Yes, I exactly would say that, because I think Europe represents a great combination of, on the one hand, value, including things like a very decent income through the dividend yield, but also growth, because we see, as I said, economic growth ballooning up, and at the same time, companies have restructured a lot within Europe and actually are seeing their profitability improving alongside the economic growth. So that's a very nice mix.
Okay, so put our money where your mouth is. What's a good example of a stock we could buy in Europe?
Okay, well, I mean, I particularly like insurance companies. So if you are investing in Europe, a company like Allianz, which is one of the biggest insurers in the world, is a great pick because it's obviously German, but really is exposed throughout Europe, and also has some very nice assets. It owns PIMCO, one of the biggest wealth managers, fund managers in the world in the States. So that's a great company.
And UK-based stocks that have good pan-European exposure?
Yeah, I think that's a lovely indirect way to invest in Europe. And the one I've picked on was Sky. As we all know, Sky, satellite TV in the UK, dominant. But what we have to remember as well is that it has recently absorbed Sky Deutschland, which is #1 pay TV in Germany and Austria, and also Sky Italia, which is obviously #1 pay TV in Italy. So actually, it has a very big European footprint today.
Is it possible for UK investors to expose themselves to a range of European stocks?
Of course, George. The easiest way, as I've said many times before, is via an exchange-traded fund, a listed fund. And there is one listed by Deutsche Bank called the X-Trackers MSCI EMU, as in Europe ex-UK, UCITS ETF, and it really charges very little, 0.25% per year in management fee, and you have exposure to Europe ex-UK in one go.
Very good, Ed, thanks for that. So don't be too afraid of Europe. It's not a question of Greeks bearing gifts, but nevertheless there are opportunities in Europe. Thank you very much, Ed, and look forward to seeing you next time, and thank you for watching Money Talks.